Hey, this is Jack from Alpha Charts with a stocks to watch video. Today is January 1st, 2023. Happy New Year, everybody. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right. So I'm actually going to combine my two stocks to watch videos. I usually make one for my super follow group, a little bit more in depth, and then I do make a second one for everybody else. Again, just a little bit less details in there. This one is going to be combined for everybody. Happy New Year. I guess it's a New Year's gift. Plus, I want to make a chart on a video on monthly charts later today, and I only have so much time. So I'm combining this particular video so I could get to that monthly chart video in a little bit. All right, that being said, let's get started. By the way, if you haven't liked and subscribed to this video, please do that. If you haven't followed my super follow group yet, on Twitter at AlphaCharts365, you know what? Go ahead and look at it. It's a New Year's gift to yourself. Why not? All right, but here we go. This is SPX trend line, which everybody has drawn on their charts by now. We've had it for a while, and you can see price keeps getting rejected. And most likely price will be going down, right? We don't know how far, right? We don't know if this will be a bottom or not a bottom. I go through all that in my state of the market video, which I put out on Saturday. Check out my YouTube channel if you haven't checked that out yet. And I go into my reasons why and both the bull and the bear case. Let's get to the charts. So even though we think price may be going down, there are certain things that are holding up pretty well. And so I'm going to go through what I believe is holding up pretty good, and let's go. So energy names in general, going to a weekly chart, holding up pretty well, right? Near all-time highs. And within the energy sector, I like OIH. I think OIH is by far the best. You have this kind of double head and shoulder type of look right there. This type of formation I'm seeing on a lot of charts right now. So again, we don't know if this will play out or not, but again, it looks really good, especially comparative to the rest of the market. And then within OIH, there's a whole bunch of names that I like. Schlumberger looks amazing, right? Very easy to manage risk over here. Schlumberger using the moving averages. Tenaris looks really good. This one has broken out. Some decent accumulation kind of coming in here right now, and you see the dry up right there. So I kind of like that. Valaris. Here is a nice little area we can manage risk against. There is the moving averages, again, bunched up, looking good, bullishly aligning again. And again, just zooming in, you see, some accumulation happening on this side of the base, which we like. RIG. This is the old Transocean. We can easily see this area right here. Nice looking kind of base, double bottom. Again, looks like OIH, right? Looks just like OIH. Just if I do that, it looks exactly the same. So looks really good. What else do we have here? FTI. Yeah, I go through these quickly because I want you guys to really make the trade your own. I don't want to, it's not about giving you a trade as much as about, here's how to train our eyes to see things that are setting up in the right way, up and to the right, moving averages, getting to be aligned or bunched together, which I really like. Here's FTI. Again, you have this moving average bunch. So if you chose this particular trade, whether you use the 23-day or the 50-day, you have very limited risk with potential very high reward. So it looks good. CHX, there's Championix, whatever. Again, kind of retesting the breakout, and it held so far. So I like that. And then OII. All right, so there's OII trying to break out. Again, not the place I'd probably buy it at right here. But this is an interesting area that's at. And if it pulls back a little bit, that may give you a potential entry right there. And again, OII, Oceaneering. So at the end, I'm going to go ahead and give you guys what my favorite one from each of these groups are. I have 1, 2, 3, 4, 5. I have 6 different groups we're going through. The first one was energy, OIH, and then the individual names. And then there'll be a favorite at the end. I can tell you when I have a whole lot of names in it, a lot of times I may go with the ETF. Okay. Next up is going to be XLF. All right. And here's XLF. And so here is, again, looks just like OIH, doesn't it? I mean, no different at all. Has that kind of complex head and shoulders type look to it. And within there, I think insurance still looks the best. Here's KIE. It's the insurance companies. We have a 200-day moving average, which is starting to rise again. And we have price right at that, all the other moving averages. Now, again, we'd have to move a little bit higher for me to really get behind the ETF. But within the ETF, I have 5 names that I think look really, really good. This first one is Allstate Corporation. And we can easily see how a potential breakout here could be a pretty strong move. And overall, some nice accumulation in here. Even this particular day right there, to me, was a potential stealth accumulation day. So we'll see. And you see the buyers really stepped in even on this big gap down, 12% gap down. But then the buyers took it off the low. Again, not the best looking candle, but even if we put a VWAP there, you can see how the VWAP is starting to hold. It's coming up to the 200-day. Again, Allstate, potential breakout play. ACGL. Okay, very strong looking name. There is your gap that with high volume. Again, price is way above that. It may need to come back, maybe a little extended, but overall it looks really, really good. Again, even if we get rid of this, you can see there's still more accumulation happening in this particular name. So again, it looks really good. ACGL. Global Life GL. Again, I mean, look at this accumulation. It looks fantastic, right? Looks really, really good. What else? We got AFLAC. This one is probably closer to a good setup. It's got a strong move, going from 56 to 72. So it's got a 50% move higher. Now it's consolidating, and maybe we get another 50% move higher, right? That'd be kind of nice. That'd bring us right to that $100 level, psychological level. So breakout here, and it's very easy to manage risk. Again, I would do it against this 23-day EMA, but we have a rising 200, rising 50. Every moving average is rising, right? So look how much different this looks like compared to this, right? Or even if we look at Amazon, right? This is what we want to avoid. And this is what we want to be buying, right? We want to be buying breakouts here. That's AFLAC. And then last one is TRV. I know it's a boring insurance company. I get it. It's not as fun as a big growth name, but it's what's working, right? I mean, it's what's working. Here's Travelers Insurance. Again, another insurance company came back. Again, may need a little bit more time, but overall it looks pretty good. So those were financials, insurance, the best insurance names. Next, we're going to do industrials, XLI. All right. So XLI, again, is holding up pretty well. Tried to break out, kind of came back, but it hasn't fallen apart. And again, it's making that kind of complex head and shoulders kind of, maybe. There's only 2 names I really loved. I'm sorry, ETF first. ITA, Aerospace and Defense. This name, again, holding up really, really well after the COVID drawdown. Came right back, and it's it's trying to bust out, and it's really gone kind of dormant, right? The last few weeks, kind of tightish consolidation, decent accumulation, for the last month or two. So again, it looks interesting. Rising 200-day, 50-day, all the other moving averages are rising as well. Looks good. 2 names. I liked really 2 names in this group. Boeing. I think Boeing, I've talked about Boeing a few times now. Boeing looks really good. Again, look at this accumulation going on. The other one is HWM. Again, great accumulation that's been going on this entire way. Look how it's pulling back. You get this dip in volume, a few little spikes here and there, but this was off the bottom. So I don't even count this one, to be honest with you. This one, again, look, buyers showed up. So even though it's a red volume bar, to me, this is an accumulation day, not a distribution day. Because look how close at the top of its bar. I guess that's my point. To be explained a little bit better. Again, maybe it needs a handle. Maybe this was the handle, and now it's ready to break out. But it's a reasonably priced stock. Nice accumulation. And I think it's near, is it all-time highs? I think it's all-time highs. Let's go to monthly. Yep, all-time highs, right? What's not to like about this name? HWM, Howmet Aerospace. Okay, moving on. Healthcare. Healthcare is holding up. Again, so this really, by the way, talks to the type of market that we're in. I'm talking about energy, financials, some industrials, light on industrials, healthcare, more defensive areas of the market. And again, it goes to my initial thoughts on how the market is not very healthy right now. So here's healthcare, XLV. Again, it's come back since it tried to hit all-time highs, and it's hit the 50-day, and 50-day has held, as well as this potential area right there. So we'll see if it's ready to go back up. Within healthcare, for me, I like the pharmaceutical sector. Strong move. There's a consolidation. You look how much stronger it is. You're about to get that bullish cross. So things are looking good in the pharmaceutical industry. Again, if I could kind of pull this, I don't need to pull it like that, but that's fine. You see it kind of came back in. That's more of a retest in a lot of ways, right? The 23-day. So that looks good. But within there, I think Merck. It's been so strong, right? Again, if you play it against the 23-day, which it has not touched, right, since November. So if you could, say, okay, I'm going to buy it here, and if it crushes, if it falls below the 23-day, I'm out. What is that, a 1% risk, right, for something that's in a strong uptrend like this? That's not bad, right? And even if you stop out on there, it's a 1% risk. I mean, what's not to like? NVO, this is a Novo Nordisk. I believe they make insulin. Strong move up. Again, hasn't touched a 23-day since November, right? Again, this is less than a 6%, probably 5% or so risk right there. If I was to look at it, that's 4%. Look at that. Again, nice accumulation, and things are looking really good. I know in the U.S. we have some caps on insulin for Medicare patients coming in the new year. Maybe this plays a role into this chart. I don't know. But NVO looks really good. And the other one is HLN, right? Haleon, I believe it's conglomerates. I'm not exactly sure who makes up Haleon, to be honest with you. But here was the IPO. That was back in July, and it made its first base, IPO base. There's your cup and handle of IPO base. Nice accumulation coming in on this side. Yeah, this looks really good. HLN. And we're talking about 5% risk or so to the 23-day, which, by the way, it has not even touched since November. Exactly. See the theme there? So that was healthcare, pharmaceuticals, and then the best looking names I could find, strongest names in that sector. Okay. Next up is going to be, and this is my last sector, it's going to be materials, XLB. So XLB is below its 200-day moving average, which I do not love, but it is not far away from retaking it. I felt like versus the SPX, it was still holding up very, very well. We'll see if that continues or not, right? Within XLB, there's a couple sectors that I do like. SLX, the steel industry. Again, it's got this, came back, kind of retested this breakout from the double bottom. So far it's held, even though it's got some declining moving averages in there. It doesn't look terrible. Again, very easy to manage risk in this particular area. I like Vail. Right, here's Vail, right? They I think they mine iron ore, probably other things too, right? Other metals. You're about to get that bullish cross right there. You got so again, you were aligning things bullishly, even though the 200-day technically is declining. As long as price stays above it, that'll start to flatten and move higher. Again, you see how you have a decrease in volume, and it's trying to break out, right? And I think it get back up to this $20 level, right? If you go from 17 to 20, it's 15% or so. It's not bad. A little, in this market. That's amazing, actually. So that's Vail. What do we got? We got Rio Tinto. Again, I believe they do like aluminum and iron and all kinds of, all kinds of stuff. Again, you're about to get that bullish crossover. Nice little flag pattern that is making here, right? Went from 52 to 73, 50% move. Who says it can't get up to another 50% into that, $100 range, maybe near all-time highs, or even gets up to 85 or so. Still a pretty good move and a decent amount of accumulation happening. So that's Rio. And then TS or Tenaris. This one I like because it's already broken out to all-time highs, right? Let's just go to monthly so you guys can see. Oh, not all time, I'm sorry, multi-year highs, right? From 2000, it hasn't been this area since 2018. We may be able to, I don't know, maybe above here. It's tough to tell. Maybe it has some overhead supply, maybe not. But again, multi-year highs in Tenaris. Already kind of broke out, which I like. And there's your 23-day at $34 basically, and it's a $35 stock. So you're talking about a $1 of risk for the most part in this name, and it's just again broken out already to multi-year highs. That's Tenaris. Okay, so those were all the steel names that I liked, but I also like the gold miners here. Also in the materials field, kind of goes with the idea of miners, right, in general. And so gold miners is having this amazing looking cup and handle off the bottom. It did just fall back below the 200-day moving average, but still was holding the 23-day, and there's your 50-day coming up right behind it. If you want to get in here, your 50-day would be the absolute end. That's another 4%. I am in this position already. I did buy in here somewhere, and I may, if it falls down, I may sell some, but hold a portion to the 50-day. That's something. And then if it breaks the 50-day, I'm absolutely out. But this is a name that looks really good, is setting up, has a nice base. Doesn't mean it's going to hit, but this is what I'm looking for, right? Again, look at all this accumulation happening, and then the dry up in volume in the handle, right? That's textbook. Whether it works or not, different story, but we can manage risk at that point. So within GDX, so gold miners, there's some names I like. AEM. Again, tons and tons of accumulation going on in this name. Again, kind of pulled back a little bit, but if we can, we can manage risk again against this 50-day, against the 200-day, against the 23-day, whatever you really want. It's not, none of them are that far off, right? So even to the 50-day, you're talking about, a 7%. So half position to maybe the 50-day or something like that. That's AEM, WPM. Again, it's pulling back, but you're about to get that bullish cross coming this way. And there's your 200-day, which, as long as price stays above it, should start to flatten out. And that would look really good. GFI had this giant move higher, and then it's kind of slowly eking back. But look at this. This is not me and you buying. This is a major player buying, and volume all kind of dried up after that as it's consolidating. So this could be easily played against this 50-day, right? That's how, if I was interested in this name, GFI, yeah, 1035. Yeah, if it breaks $10, I'd be out, right? That would change my mind on this. But you're talking about 35 cents of risk. That's about 3.5%. That's nothing, right? That's within our risk tolerance. So GFI looks really good. AU. Here is AU. And again, it's got the bullish cross already, great accumulation, and it is starting to trend higher. That's what we're looking for, right? Then now we just got to find the right place for entries. This was AU, so now we're RGLD. There's RGLD, and I think, yeah, same thing like all of them. You got this beautiful base, Price above it, again, it's a little further from that bullish crossover between 200 and the 50. So I like it maybe a little bit less, right? A little bit less strong, but still a good name, and it's very easy. We can manage risk, at 110, right? So as long as it's above 110, we can be long this name. You're talking about less than about 2.5% worth of risk right there, right? And if it plays out, great. We can even add to it. If it, buys half position, stops at 110, pulls back, doesn't pull back, consolidates. If it does eventually break out, we can add to that position, and then our cost basis is still much lower, and we're already in a profitable position. So that's an option. RGLD, and then AUY is the last one. And again, you see this one already did cross the 200-day, so we love that. Nice accumulation happening in here, and it is, again, trying to move higher out of this general area. Okay, so there you go. Those are all the gold miners I like in the materials sector. So here are my favorite or top ones. First off, when I see a lot of names all together that look good, I may just buy the ETF. OIH is a great example of that. This is a name I would consider buying. And I think it's just easier and a little bit less risk than individual oil and gas names. And it's very easy to manage risk here. Actually, I love this way this looks, because, I'm talking about maybe $10 of risk, which is 3%, if I was to even buy right here. All right, so OIH is one. What else do I like? I like AFL. That looks really good. Very easy, again, to manage risk. Beautiful uptrend. Globe Life, also in the same sector, looks fantastic. So either one of those look good. HWM was my favorite in the industrials. Love how it's going out. Again, moving out of this base, kind of a deep cup and handle, good accumulation, and just a strong looking name. That was HWM. What else do I like? In healthcare, HLN was what I really like. I mean, it's a beautiful IPO base. Does it get any prettier than this? HLN? Nope, I don't think it does. So very easy, again, to manage risk against. And you're looking at, less than 5% of risk. That's great. TS in the steel names and the miners, all that kind of stuff. A beautiful little cup and handle trying to break out. There's your retest. Again, very low risk, high reward name. If it breaks that 23-day or roughly $34, I'd be out this name, right? So $1.16 is what we're doing. Again, right around 3.5% or so. Yep, of risk. That's right my sweet spot. I tend to have risk in between 3.5%. So this would be a perfect risk reward for me. And then in the gold miners, AEM looks great. Again, I love this accumulation happening right below the surface as it's basically moving sideways. But I already am owner of GDX, and I think with gold miners being so volatile, I think owning the ETF makes a lot of sense as well. So I own this. If it fails on me, like I said, if it breaks below the 23-day EMA this first week, I may cut maybe even just half of it and then give it to the 50-day, because again, I love the way this looks. So I'm willing to give it a little more room, but I got to take a smaller position size. So I'll take a lump here. And if it holds the 50-day, I can always add back in as it progresses higher. Okay. So that's what I got for you today. There you go. Stocks to watch. Happy New Year, everybody. Be safe out there. This is a new year. We all get a fresh start right now. Let's trade right. Let's trade the best we can. Let's not hold on to losers. It's only, and sometimes cash is a position too. Like, I'm not fully invested right now. No way. It's just not the right time for that. But some of these names I think look really good, and we can manage reasonable risk against them. And I think there is a bull case for some names out there. So hope y'all are doing well. Again, thank you for the super follow. If you're a super follow, if you're not, you may want to consider to become a super follow at AlphaCharts365 on Twitter. Take care, everybody. Bye-bye.